Volatility is one of the things that creates opportunities in the market. And we specifically look to take advantage of times when the market volatility presents itself to both recycle capital within our existing holdings, but also to add new names to the portfolio. And specifically what we're looking to do is to pair that long-term time horizon and that long-term conviction in our holdings relative to short-term price opportunities and price volatility. And we do that through both adding and trimming of our existing holdings, as well as leveraging our idea generation process and bringing new names into the portfolio, oftentimes names we've followed and researched for long periods of time, and we use that market volatility to bring them into the portfolio. Our scenario analysis is the outcome of our fundamental research process. It starts with quality, and then intrinsic value growth, and then valuation. And for the scenario framework, we think of our base case as the team's view of the most likely outcome. But we also recognize when things come in better than we expect, that's our best case. And when the risks we identify to the base case come true, that's our downside scenario for the team. And we use those as critical inputs into the decision-making process around portfolio construction, as well as around risk management. We create our scenarios using the discounted cash flow approach to valuation. And the reason that we use a discounted cash flow is we think it is the most appropriate way to match that long-term view and that forecasting of cash flows over the appropriate competitive advantage period for each business we consider. We then use these three scenarios we've created as important inputs into the portfolio construction decision-making, as well as into the risk management tools. And specifically, we use that downside scenario as a frame for security-specific risk and a key input into our risk management tools. This is a concentrated portfolio where we're looking to buy quality businesses that can grow their intrinsic value over time and do so at the appropriate valuation. Our research process begins with building conviction in quality because that's what allows us to have conviction in our conclusions around intrinsic value growth, which in turn allows us to have conviction around our valuation framework. Further, it's this conviction in our holdings which allows us to take advantage of that short-term market volatility and to have what we think is the appropriate position size in any holding in the portfolio. To oversimplify, we think this conviction is a critical part of our investment process.